Welcome to the Pro Taker Deep Dive. We are diving headfirst into, well, a truly monumental infrastructure pivot. The question we're tackling today is whether the wild world of Bitcoin mining is officially handing over its crown to the next digital gold rush. Artificial intelligence. Just imagine that deafening server noise, once all for the blockchain, now powering AI.
That's the core tension, and it's happening at, incredible speed. This isn't some slow evolution. It's a rapid structural shift. So the mission for us today is to really unpack why these former crypto mines are so uniquely positioned to become, well, AI landlords.
Right.
We need to analyze the specific advantages they have and, crucially, look at the immense opportunities and, the very serious risks ahead.
Okay, let's unpack this then. The data we've looked at shows a transformative shift is absolutely underway. It's not even a question anymore. Over 70% of the leading Bitcoin mining companies now report revenues from AI or high-performance computing initiatives.
We call that HPC, yeah.
Exactly, HPC. This is a profound move. It fundamentally shifts the entire investment thesis from something based on volatile crypto margins and hash rates to one that's rooted in stable AI real estate, compute scale, and power procurement.
And that pivot isn't happening in a vacuum. It's being driven by two massive simultaneous forces that are, both pushing and pulling them.
Okay, so give us that dual pressure scenario. What's pushing them out of crypto?
So on the crypto side, the pressure has just become immense, especially after the 2024 Bitcoin halving. That event, plus rising global power costs and just relentless competition, has dramatically squeezed the profitability of the pure mining model.
So they had to find something else.
They're forced to. They either get ruthlessly efficient or they find higher margin, more sustainable businesses.
All right.
And then on the other side, you have the almost unthinkable insatiability of AI.
It's endless.
It's endless. Training large language models, generative AI tools, it's fueling this unprecedented global demand for GPUs, for data center capacity, and the electricity to run it all.
And this is where it gets really interesting, because the miners kind of become the heroes of the story here. Traditional cloud providers are struggling. They just can't add capacity fast enough.
They can't keep up.
But miners, they're uniquely positioned. They're already sitting on top of an estimated 14 gigawatts or more of existing grid-connected power.
They have the land, the permits, that huge power connection already there.
And the operational expertise.
Yes.
The substations, the advanced cooling, it's all built and running.
Exactly. And because of that unique starting position, our analysis suggests miners can slash AI data center deployment timelines by up to 75%.
Wait, 75% faster?
Yeah.
That sounds incredible. Is that just marketing spin? They still have to rip out all the old Bitcoin gear and install new, far more expensive GPUs?
That's a critical challenge for sure, and we'll get to it. But the core advantage isn't the building itself, it's the power. Securing a new industrial-scale substation and the high-voltage connectivity, that can take years and cost hundreds of millions. Miners already solved that problem.
So they're skipping the longest, most expensive part of the process.
They're eliminating the biggest lead time item in data center construction. That speed is invaluable right now.
So let's talk about that pivot itself. How does the skill set of a guy who just oversees thousands of Bitcoin ASICs translate to being an AI landlord?
Well, they're not just IT managers, Their core competency is industrial grit. It's infrastructure reliability. A successful miner is a master of power procurement, massive facility management, and really sophisticated automation.
Okay, so think of them more like industrial electricians and HVAC engineers at a massive scale.
That's a perfect way to put it. They've mastered managing huge, consistent electrical loads in extreme heat. And we're already seeing concrete examples of this. This isn't theoretical. Bitfarms, for example, has done a major transformation at sites in Quebec. Hut 8 has significant ventures in Texas focused on HPC and AI. And just look at the capital markets. Companies like Iron, Hive, Cipher Mining, they've all issued major capital raises specifically for GPU cloud expansion. The money is flowing in.
And the financial scale of this is just staggering. We saw that Iron specifically is targeting a $500 million annual AI cloud run rate by the first quarter of 2026.
A $500 million run rate.
And if you look further out, more than half of their projected 2027 revenues are anchored in AI, not Bitcoin. That's a complete flip of the business model.
And the real margin expansion comes from unlocking entirely new service models. It's not just swapping hardware, new revenue streams are emerging, colocation for GPU clusters, inference as a service, regional AI training hubs.
And I imagine governments are helping this along.
Oh, absolutely. This is often amplified by government support. Tax credits, power grid incentives. You see it in Texas, Georgia, and a lot of Canadian provinces.
But okay, this can't be a guaranteed success story for everyone. It sounds like differentiation is absolutely key.
It is. It boils down to critical infrastructure details.
So what separates the winners from the losers?
The winners have reliable grid connections, proven experience with high-density cooling, and we're talking advanced stuff like hot aisle, cold aisle, or even immersion cooling, and crucially, the ability to actually get their hands on those scarce GPUs.
And retrain their staff, I'd imagine.
And retrain their staff. If you can't adapt, you're looking at consolidation or, frankly, closure.
All right, let's shift to the double-edged sword here. The opportunities versus the risks. I'll start with the bullish scenarios because for the companies that get this right, the rewards are immense.
Go for it.
First, stable revenue. AI hosting contracts, they lock in premium price multi-year revenue streams. That drastically reduces the crypto volatility.
Predictability.
Total predictability. Second, you see massive asset monetization. Those marginal mining sites that were valued low because of energy costs, they can be re-rated at much higher valuations as AI data centers.
And that re-rating ties into another big benefit, the regulatory and the ESG upside. Can you break that down for our listeners?
It's a huge perception shift. You're moving away from energy-intensive, often criticized proof of work.
Yeah, the wasteful narrative.
Exactly. And you're moving toward what's seen as public benefit AI workloads that can bring permitting flexibility and attract new institutional capital that was always shy about crypto.
That's a powerful upside. But it begs the question, if the upside is so huge, why isn't everyone doing this right now? What are the major pitfalls?
What's the catch?
The first one is what you brought up earlier, capital and technical barriers. Retrofitting a site requires a massive investment in hardware, networking, and thermal redesign. Not everyone can afford that.
And once they do retrofit, they're stepping into a whole different competitive arena.
Precisely. They are now competing directly with established, dedicated players like Lambda Labs and Crusoe Energy.
Not to mention the giants.
And the hyperscale cloud giants like Amazon and Microsoft, their early mover advantage in infrastructure could disappear very quickly. There's also a significant talent risk. Running an AI data center isn't just plugging in servers. You need specialized expertise in the AI stack, things like Kubernetes and distributed training systems.
A completely different skill set.
A different world. A lack of that specialization risks painful outages and customer churn.
So the risk is they move too slow and get crushed, or they move too fast, overinvest, and maybe flood the market themselves. It sounds like a very narrow tightrope.
They absolutely are walking one. Which brings up the final risk, market overbuild and public backlash. If too many sites pivot at once, GPU hosting margins could get compressed. And what's more, AI power demand is stressing grids. Public sentiment could turn against data center sprawl, leading to policy shifts.
So they're solving one energy problem only to create another potential one?
Potentially, yeah.
Now, this whole story, this reinvention, is just starkly evident on the trading screens. It's fascinating. The data shows that after big drawdowns, high-profile AI pivot announcements have repeatedly triggered marked momentum in these stocks. The market is clearly voting with its dollars.
iArn is the perfect example here. Its price surged over 500% year-to-date, right on the back of securing major AI cloud contracts.
Wow.
And Cipher Mining and Bitfarms showed similar outperformance, tied directly to announcing deals with top-tier clients like university labs or big tech firms.
And technically, these stocks are showing classic bullish signs, extended breakouts, expanding volume. They're setting themselves up as the price leaders in this new infrastructure pivot group. We have to stress, though, volatility is still incredibly high, so the risk and the potential reward are both heightened.
And if we connect this to the bigger picture for you, the investor, the message is really clear. You have to shift your focus entirely. The new watchword is, don't just follow the Bitcoin price anymore. Track the miners who are actively turning their energy expertise and real estate into the AI-driven backbone of tomorrow's economy.
This is truly about flipping the script. It's about harnessing years of, that infrastructure grit, that power procurement expertise, all those skills from the tough crypto world to meet the new high-margin king of digital demand, AI.
And the companies that execute this pivot swiftly could very well lead the next phase of infrastructure value creation. They have the potential to outpace not just pure crypto plays, but maybe even some big tech segments in this new data center gold rush.
Mm.
So the question to think about is, what new hybrid business models might emerge when the power of digital assets meets the stability of AI infrastructure? It's a space worth mulling over.
See you all in the next Pro Ticker Deep Dive.